Hey, this is Justin with DayTradeTheMarkets.com on Friday, December 14th, 2012. The ES and the index markets have done absolutely nothing today, so I thought I would take a look at a market that has had a nice move and has had some good information that you could have used, which is the Euro. Look at that on a 2-minute chart. Now, with that said, it's about 2:50 Eastern Time as I write this, so the market's got a good hour 20 minutes to go, 25 minutes to go, so things could happen. But with that said, I'm just going to assume not much more is going to happen today. Here is here's the 2-minute of the ES, and you can see we've basically traded in about a 4-point range. We've had next to no structure, certainly no follow-through on any of our major structures. We had a quick rejection of the attempt lower, a quick rejection of the attempt higher. I mean, it's just a textbook consolidation, do nothing type of a day. And that's, with that said, that's good information to have. You need to know, it's important to put the market in context so that if there is a very tight consolidation day, and again, it doesn't take a genius to see that that's developing today, but if there's a pretty tight consolidation day, you need to know to either be nimble or just, go play golf, whatever the case may be, do nothing. But with that said, I wanted to look at the Euro today, because there was some nice moves on the Euro, and again, more could happen today as I do this video, but I just wanted to break this down piece by piece. And I thought what I would do is, right now you're looking at the full chart with all the different evidence on it, but what I thought I would do is just kind of break it down piece by piece to help you make a little bit better sense of it, and show you kind of, obviously it's not real time, it's after the fact, but the evidence as it's presenting itself, I wanted to kind of talk about the logic of what you're seeing when that happens. Before I do that, let me just take a couple seconds to kind of break this down if you're not totally familiar with what this is. But the software that we have gives you various pieces of real-time, and it's order flow driven, market-based evidence, and there are several components with that. We can call them pieces of the puzzle or clues, and the more pieces of the puzzle that you have that come together, obviously the clearer the picture is going to be. And so that's the idea. When you are trying to make a trading decision, if 1, 2, 3, 4, 5 pieces of evidence, for example, are supporting that trading decision, you know that your odds, your probability, or your edge is highly increased. And obviously, as a trader, that's really all you should be looking for, is a way to increase your edge. It's a probability game. Trading is obviously, if hopefully you're not looking for the Holy Grail or some magic system. That's a futile search. What really good traders understand is that you're looking for a way to help make better sense of the market. So in other words, better information and better education so that you can make better decisions. If you can make better decisions, obviously you're going to have better results. So right now I've got everything on the chart in here. What I'm going to do first, though, is break it down and just leave on the relative aggression bars and the high velocity moves. That's kind of our first piece of evidence. So let me go ahead and set the chart back up and look at that. So again, right now everything's on there. Let me take off everything except for the high velocity moves and the relative aggression bars, and then we'll talk about what those are telling us. Then we'll add some of these other components as well. Okay, so what I've done here is I've taken off everything except for what we call our level 2 and level 3 buying and selling aggression bars and our high velocity moves. The reason I've done that is because this is kind of what we teach as our first basic building block. And whenever there's a major structure like one of these, we want to ask ourselves, is there follow through or is there rejection? And that simple information on its own is very valuable, because it's going to give you, with pretty high probability, the likely, at least short-term direction of the market at the time. So the first structure of the day here, and I'm just looking at the U.S. session here. You could put this, to the European time as well. That same logic would apply certainly. But our first major structure here is this level 3 selling aggression bar, as well as this high velocity move. And whenever you have a major extreme selling aggression bar like this on the low of the day, or an extreme buying aggression on the high of the day at the time that it's formed, it's either the start of a vertical move in that direction, or it can be capitulation and the start of a reversal move, and probably the higher low has been put in place at that time. So we want to ask ourselves at this time, when this is formed, as soon as that bar comes in, we want to ask ourselves, first of all, does the high of that bar hold? That would be our general expectation. Number one. Number two, do we get follow through below the the bar here. So in other words, is there follow through lower or is there rejection higher? And you can see typically if there is going to be a breakout, there's going to be pretty quick follow through within 2 or 3 or 4 bars. The high is going to get taken out, or the low is going to get taken out, and then we'll have at least a full bar below there pretty quickly. In this case, you can see that the low did not get taken out. We started moving our way up a little bit. We started grinding our way higher. The high of this bar was taken out, and it was done so on a high velocity move. So that's a pretty good sign of rejection, which is telling us at least short term that we would expect the market to move higher. So now we do have, trades, we call this a level 3 rejection trade, where if there's a level 3 bar on the low of the day or a level 3 bar on the high of the day that gets rejected, we know that the high of that will likely get tested, and it came within a couple ticks there. We know that the high of that bar in this case will likely get tested later on. If that holds, it's kind of off to the races. So our first sign here was essentially won by the bulls. You can see then we had another high velocity move, which is major structure, with immediate follow through. And then we had another high velocity move and level 3 extreme buying aggression bar on the high of the day. Now in this case, we've already had rejection of the level 3 bar on the low of the day. Now we're having a level 3 on the high of the day. It's kind of a perfect scenario for what we call our breakout trade, where you just market order, get on board with that. Same thing here, making new highs of the day on that one after a little bit of a pullback. But again, the point of this exercise that I'm talking about here is just to give us pretty good evidence as to which side is in control, especially looking at the first major structure of the day. Here's the first major structure of the day. There was no follow through, there was rejection. That's a sign that the bulls at that point are in control. And until we see evidence to the contrary, you have to assume the bulls are in control. You want to preferably be on the long side, avoid anything on the short side. Okay, so that's kind of the first piece of evidence. And again, when any of these bars come in, we have different trade opportunities that we like to talk about. There are, for example, like I was showing you, the a level 3 rejection trade. Here's a breakout type of a trade. Here's another breakout type of a trade. You can also wait for what we call level 3 retracements, where you have a level 3 bar that comes in and you like that side of the market. You put a limit order in toward the low of that bar, Now in this case it did not happen. We did not retrace that far, so you miss out on that trade in that case. But that's a trade that I really like, is that level 3 retracement type of a trade. So, but the important thing is, this is a very subtle point, but you don't want to be looking, or at least in my opinion, you do not want to be thinking about trade entries first. You want to be thinking about market context first. So first, the first thing we were able to determine early on was that bulls were pretty well in control. So now you want to be trying to figure out ways to get on board bullish moves. We have here's a high velocity move. Same idea here, where when that first comes in, there's a high velocity move retracement trade, which is to the low. But if you get immediate follow through within 2 or 3 bars, you have a full bar above. There's also the option to take what we call the high velocity move continuation trade. So that's where you put a limit order toward the high of this box. Same thing here. By the time we had a full bar above, the market didn't retest to there. Here's another opportunity right here. Again, this is a very strong market, but it's the same type of idea. So, again, and there are other ways to get in the market, which I'll show you in just a moment. But again, the first priority is context. What's the market doing? What's the likely direction? Number one, that keeps you out of trouble. Number two, it keeps you on the right side of the market. Okay, let me add in next. Let me go ahead and look. Let's throw in just to keep this simple, the directional filter in real time. Okay, so let's throw that on the chart now. Okay, so I've added the filter, and you can see it across the bottom of the chart there. And what the filter is telling us is it's looking at the order flow in the market. It's telling us whether, all things equal, there is more order flow aggression on the bear side or on the bull side. And it goes from red to light red to gray for neutral to dark green for extremely bullish to light green for moderately bullish. And the idea here is the filter in itself is not the be-all end-all. It's just it's one more clue to look at, but it does certainly give us some nice clues. You can see early on, the market had some strong selling coming in, and then even though the market was basically still on good lows, we have the filter turning green here, giving us another indication, just another piece of evidence that bulls are definitely more in control, and all things equal, you would rather be on the long side. Okay, so let's look at another piece of evidence now. Let's go ahead and put on the real-time support resistance zones as well, and I'll talk about those. Okay, so what I've added now, you can see these lines, and when you see them on the chart, that's when they popped up. Obviously, everything you see here was happening in real time. And normally, you can see there's yellow on the top. Normally, that's going to be red, and the lower is going to be green, meaning green for support, red for resistance. When you see it's yellow or gold there, it's kind of like a yellow light, a yellow stoplight. It's what we call a caution zone. It's telling us that you still want to monitor this zone here, but there's a lot of bullish sentiment in the market, so that our real expectation, again, you want to monitor this. Our real expectation is that is going to be pierced. Okay. And that's what happened there. But the idea here is, again, when you have a green zone, it's a support zone, so all things equal, that's a pretty good place to be looking to get long, and it's a place that you would certainly want to think twice before getting short. Okay, same thing with a resistance zone. This is a caution zone in this case, but a resistance zone, generally speaking, all things equal, it's a good place to be getting short, and it's a place where you'd want to think twice before getting long. Okay, so in this case, again, let's just look at what we have so far. Again, putting these pieces together, the more evidence that comes together, the more puzzle pieces that come together, the clearer your picture. So again, the first building block was structure. Okay, you can see the structure was basically being won by the bulls. Another concept we want to look at is the filter. You can see that's again bullish. Now we've thrown on these support resistance zones, so obviously when you have you can put the market in context and the market is relatively bullish, then certainly a good place to be looking to get on board would be toward these green zones. You can see here we kind of had one of these, basically a perfect scenario where you've got, really good structure for the bulls, bullish filter, support zone, market tests into there beautifully. I mean, it's just kind of a textbook confluence type of a setup right there. But again, that's just the support resistance zones. Like I say, each of these components individually, it's good information, but it's not the be-all end-all. It's when you can have a situation where many pieces of evidence come together at the same time. So again, structure, filter, support zone. A lot of pieces of evidence are coming together right there. Okay, hopefully that makes sense. Let's go next and let's throw on the deceleration and divergence indicators. Okay, now I've put on these decelerations or divergence type indicators, and you can see them throughout the chart here, these triangles and dots. Basically what that's telling us when we see one of these, let's look at and again, just like I was showing earlier, it's just another idea of confluence where you've got the market's decelerating right here. So in other words, it's showing us that the market's likely to turn around at least short term. That happens to coincide with a support zone, which coincides with a positive green filter, which coincides with bulls winning all the major structures. Again, that's it's kind of the perfect type of a confluence type of a setup there. But what deceleration essentially means is that, just for example, here is a bar. You can see that this bar has a higher high than the prior bar. Okay, and if this bar that has the higher high, if the aggression, the positive aggression, was actually increasing, then we would expect the market to continue higher. If, however, price has moved higher, but the under the hood aggression, the order flow, is telling us that the actual buying aggression is drying up or decelerating, then it's a pretty good indication that the market is likely, at least short term, to turn around. Okay, same thing here. This bar has a lower low than the prior bar, and if there was more selling acceleration coming into the market should continue lower. However, in this case, price has auctioned a little bit lower, but the underlying aggression, selling aggression, is decelerating, which would lead us to believe that the market short term will likely turn higher. Okay, now one thing about these decelerations, just like anything, it's just one piece of the puzzle. You don't want to, I certainly wouldn't recommend blindly taking a trade off of every deceleration that you see. However, when you have a situation where you can combine a deceleration idea with other components, again, this is kind of a perfect example. They're not always going to be perfect, but here's where the market's decelerating in green zone, or green filter, green zone, structure's bullish. That's kind of extra confirmation, a perfect type of a setup there. Okay, so that's the idea there. And again, this can be used on its own. I tend to use this software on its own. And just look at the evidence and wait for confluence type situations. We have a lot of people that use this as a decision aid for something that they're already using, whether it be some kind of technical indicator or a market profile or whatever the case may be. They have a method or a way of looking at the market, and they use this tool as added confirmation to help them see even more clearly what's going on within the market, and also to help them see even more clearly or give them confirmation to get into the market and actually help them stay in winning trades longer, or get out of losing trades a little bit earlier. So exit management and entry management certainly can be helped. So this trade, or this video, has gotten a bit long. I apologize about that. If you're still with me, I certainly appreciate you taking the time to watch. So if you have any questions about this, hopefully I've explained it well, but if you have any questions about this or something doesn't make sense, by all means shoot us an email at info@DayTradeTheMarkets.com, or just reply to the email that you received, and we'll receive that and we will get back to you as soon as possible. And otherwise, have a great weekend, and we'll talk to you soon. Thanks.